The price of Bitcoin is being manipulated right this moment, every single freaking day, because you can sell a paper Bitcoin with no corresponding demand for physical in the futures market. And the longer they put off the ETF, the worse this gets. And it's intentional. That's the thing. It's not like this is magic. This is real, and it's been happening in financial markets. Look at every commodity market in the history of mankind. When there is no futures market, the commodity has a nice cycle between buyers and sellers and producers and speculators. When the future is introduced, you get peaks and troughs, and you get massive financial engineering, and you get manipulation because it's very profitable.
During the recent event hosted by Blockwork and Bankless, the founder, CEO, and Chief Investment Officer of Morgan Creek Capital Management remarked that the recent fluctuations in Bitcoin's price are tied to the introduction of Bitcoin futures. Bitcoin has been on a small roller coaster ride in recent days, trading above and below the $26,000 threshold several times. This uninspiring performance highlighted the challenges Bitcoin is facing to make a significant breakthrough after dropping more than 10% in the past month. According to Yusko, Bitcoin's price is presently vulnerable to daily manipulation, primarily because of the capacity to trade paper Bitcoin in the futures market without a corresponding demand for physical Bitcoin. This problem is further worsened by the postponement in the approval of a Bitcoin exchange-traded fund. According to current projections, the approval rate for a Bitcoin spot ETF is 75% for the year 2023 and rises to 95% for 2024. In the meantime, Turkish lira has depreciated over 50% against US dollar, making crypto a haven from inflation. A recent report reveals that people in Turkey are quickly embracing crypto, with most aiming to build wealth in the long term rather than seeking fast profits. In Venezuela, citizens turned to cryptocurrencies like Bitcoin to combat hyperinflation and access foreign currencies when the local currency, the bolivar, rapidly lost its value. Yusko pointed out that in nations such as Turkey, Venezuela, and Argentina, Bitcoin has never experienced a bear market due to continuous currency devaluation. Yusko also highlighted that during the initial 246 years of the Republic's existence, the United States printed $10 trillion. Astonishingly, in just 18 months, another $10 trillion was added to the money supply. As the central banks continue to printing the dollars, this will cause positive movement in crypto market. Let's direct our attention towards the few clips from interview.
One Bitcoin is one Bitcoin. It always will be forevermore. But we don't price Bitcoin in Bitcoin. We price Bitcoin in other things, other pieces of toilet paper. So if you happen to live in Turkey, there's never been a bear market in Bitcoin. Not ever, because the lira just went to shit. And if you live in Venezuela, there's never been a bear market in Bitcoin because the bolivar went to double shit. And if you live in Argentina, now with talks of devaluation, again, Bitcoin just goes up. Now, Bitcoin goes up and down in the U.S. partly because of this, right? So in the first 246 years of our republic, we printed $10 trillion. 246 years, $10 trillion. Then in 18 months, we printed $10 trillion. Come on, someone shudder a little bit when I use the T word. Y'all know what a trillion is, right? Y'all math majors, I'm going to shut the doors, make you sit here with us for 31,710 years, which I promise would be most unpleasant to listen to me for that long. And you got to spend $1 every second. That's 1 trillion. So 10 trillion. We printed 10 trillion. So if you doubled the money supply, what should have happened to the dollar? Should have gone down in half, exactly. What should have happened to the price of Bitcoin? Should have doubled. That's exactly what happened. Well, but it didn't just double. Yes, it did. It was about 13,000 before. It's about 26,000 now. It perfectly doubled. But it's down in the last few months. No shit, Sherlock. Have you seen this thing called Bitcoin futures? You can go to the day the Bitcoin futures ETF was approved. The day was the peak of Bitcoin priced in US dollars. Why? Because just like gold. Anyone looked at gold since the pandemic? Gold should have doubled. Read Chris Wood, okay? Gold has been the perfect store of value for 5,000 years. It's a long time. but it's been flat, dead flat at 1,900 bucks. Why? Because it gets spoofed artificially manipulated by JP Morgan, and they get fined every year $1 billion. And they're like, yeah, well, we made 20. It's the cost of doing business. You keep fining us $1 billion and we'll make 20 and we'll be happy. And they'll keep the price flat. So they've artificially suppressed the price of Bitcoin over the past few months. Why? Well, because BlackRock wants to buy it really cheap. There was a great meme the other day. Please don't sell your Bitcoin to BlackRock. Please don't be that person. But that's what's happening. And everyone's like, oh, when's the ETF going to get approved? And what's that going to do? It's going to get approved when JP Morgan and BlackRock decide it will be approved, just like GLD was held up for 2.5 years until JP Morgan could get short enough gold. So all of this goes to my last point, which is the title of the panel, does macro matter? I mean, she stole our thunder saying probably, yes, probably. But actually, in our world, no. Crypto, digital assets, whatever you want to call it, actually are uncorrelated with traditional assets for macro reasons. Stocks and bonds are highly correlated, along with currencies and commodities, because they derive their value from the same things. GDP growth, inflation, interest rates, and corporate profits. Those 4 things have nothing to do with Bitcoin, Ethereum, Solana, anything.
U.S. inflation rate is at 3.67% compared to 8.26% last year. The U.S. central bank last raised interest rates in July by 25 basis points to cool the inflation. Bets in the Fed funds futures market showed traders broadly believe the Fed will leave rates unchanged at the conclusion of its meeting on September 20th, but late Wednesday were pricing for a 40% probability of an additional 25 basis points increase in November. Yusko emphasizes that the rise in interest rates is not primarily driven by inflation. Instead, the decision to maintain emergency-level interest rates was a measure taken to recapitalize the banks, even in the absence of an immediate financial crisis. Let's direct our attention towards the few clips from interview.
Interest rates are rising not because of inflation. There's no inflation. Inflation is caused when there's excess demand and limited supply of a good or service. What we have is currency devaluation. When an empire ends, the reason it ends is because you consolidate the power at the top with your cronies, and you go on a spender, on a binger, and you spend a lot, and you don't have any money, so in the old days, you would go out and conquer other nations, and you take their stuff to pay for it. We can't do that anymore. It's frowned upon. And so what do? You just issue debt, and you stuff it everywhere. We stuffed it in the banks. Like literally, the banks were required to buy treasuries. Well, that was not a problem as long as interest rates were low. In fact, it was free money. JP Morgan had 0 negative trading days for 3 years. 0. So when Fed funds were 0, the banks would borrow at 0, and they would invest in treasuries at 2.5%, 3%. Riskless trade, levered up 11 times. Awesome. Awesome. Why did they do that? Because the banking system was bankrupt after the global financial crisis, so you had to reliquefy the banks. So you reliquefy the banks by holding interest rates at emergency levels, even though there was no emergency. And then what happens? Well, then the bank's balance sheet gets fixed. Well, now they want to make some money. We can't make any money if interest rates are 0. So we're going to raise interest rates. So anyone's deposit rate go up from 0? It's funny how that works. So they're still paying you 0 on your deposits, and now they're lending, well, to anyone who will borrow, but there's no demand. But the few people that are borrowing that need to borrow are paying 6, 7, 8%. So NIMs have exploded, and bank profits are up. And banks, up until 2 weeks ago, were up 30+% this year. Now they've rolled over because people are kind of seeing what's happening, which is overall liquidity is actually contracting because best laid plans are you get everybody psyched about low interest rates and you get the economy back humming, you lie about the recession. There was a recession in 2022. Full stop. 0.9% year-over-year growth is a recession. Full stop. In history, that is a recession. We didn't call it a recession because we lied about the jobs number. By the way, anyone check this out? Every month this year, every single month, the NFP has been revised down.
That's
Every
not
single
for
month.
payrolls. Yeah, but for 18 months.
335,000 mythical jobs that people think were created that actually weren't created. Because no one looks at adjustments. No one looks at restatement.
Bitcoin is seen as a hedge against inflation and currency devaluation. This is particularly true in countries with weak currencies, such as Turkey and Venezuela. While the Fed is raising interest rates in an attempt to combat inflation, this could lead to a sell-off in risky assets, such as Bitcoin. This concludes our discussion for today. We encourage you to share your thoughts in the comment section below. If you found this video informative, please give it a thumbs up and don't forget to subscribe to our channel to stay informed on the latest news and videos. Thanks for joining us.